Natural up by 2.3%, and the United States Oil ETF USO on the ticker up now by 4.7%. Gold down 0.7%, $16.98 the ounce. Recapping, stocks lower, S&P down 1.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So a procedural vote to open debate on the sweeping COVID relief legislation is expected anytime soon. So this is a tough story. We haven't forgotten about this, Tim. We're talking about a massive stimulus plan that President Biden and the Democrats are really trying to get through here.
Yeah, $1.9 trillion, and there are still some changes being made to it. Eric Wasson is congressional reporter for Bloomberg News, joining us on the phone from Washington, D.C. Hey, Eric, give us the latest from where the Senate is in terms of getting this bill to the president.
Yeah, the Senate is voting right now to begin debate. This is a vote we expected to happen yesterday, but there was a delay in tweaking the bill to make sure all 50 Democrats and independents are on board and getting an official cost estimate of that bill, which is necessary under the budget rules that they're operating under. So that vote is finally just kicking off. We're expecting it to pass and then start this process of debating. It's going to be dragged out. Republicans are going to force a reading of the 700-page bill. They're going to force 20 hours of debate and unlimited amendments until they physically exhaust it sometime this weekend.
Well, you're going to have a busy weekend. Yeah. Eric, you know, when I saw that Senator Johnson was going to push to have a reading of this 700-page bill, my jaw dropped because that is going to take a long time. Is this pretty typical, though, when it comes to big legislation, this type of delay? Because the question that I have is, this is kind of a done deal because Democrats don't really need Republicans for this.
It's not quite a done deal because not all the Democrats are fully on board. We're still assessing that at this very moment. There could be some tweaks to the unemployment insurance level in an amendment and other tweaks. But, as far as Republicans are concerned, they're not really in the position to vote for this right now, and they are just trying to delay it. They think that this tactic will allow them to highlight the bill to the public and hope to drive down its popularity. It's over 75% popular in some polls.
Well, isn't that actually not a bad thing? Shouldn't we as Americans know exactly what's in there? Because ultimately it's our money being spent, and I hope it's being targeted. I think a lot of people would argue that we hope we're targeting it to the right places and people who really need it. So is that such a bad thing?
Well, I mean, forcing a clerk to read a 700-page
okay, that's a bad thing.
No one's not going to.
But you know what I mean, understanding the content of the legislation.
Well, obviously, you and I are dedicated to that. We're pouring through it now and putting out the information to people. So, yes, I do obviously believe that the public needs to know what's in here. I just, some of these tactics are just kind of a waste of time, though.
All right. So what's the expected outcome? Do we even have any kind of visibility or clarity on that, Eric, at this point?
I think the expected outcome is the Senate will pass this Sunday or maybe Saturday, and then it'll go to the House. If they make changes to it, such as to the unemployment insurance level, then there may be a negotiation with the House on how to resolve that. If not, Pelosi can put it on the floor as soon as Monday or Tuesday and get this to the president's desk by then.
How powerful have moderate Democrats been in this process? I mean, people like Senator Joe Manchin, he's really had a big role in what has been taken out or changed from this, right?
Yeah, reporters now referring to him as the unofficial majority leader of the Senate. It's a very powerful position, I think, because he's in a place where he is in a red state, a very Trump state, and he has the ability to make change. And we saw that really the lowering of the threshold, for the stimulus checks that was announced yesterday was an effort by moderates like Angus King and Joe Manchin.
Well, I was thinking I said to Tim yesterday on Twitter, there was a little picture of Manchin going around with his pinky finger up to his mouth, right? Is that Austin Powers?
Evil.
Yeah, Dr. Evil, just about his power and stuff. I'm not quite sure where to go with this because I do feel like we're going to get something in the end. Is it, ultimately, is it going to be dramatically different? Is it ultimately what, Americans kind of need at this point, Eric?
Well, we had an interesting study on Bloomberg yesterday about states and local revenue. There's $350 billion in here, and many states, perhaps half, are not showing revenue losses that they expected. So,
Right.
this could be, rather than, relief, really be stimulative in a way. So, it's a question. If there are people who believe deficits don't matter and that spending $350 billion doesn't matter, but there are those who believe deficits do matter, and this might be a waste of money.
Listen, I want to look ahead. Once President Biden and the Democrats get through this and the Republicans get through this, what's next on the congressional agenda?
Well, that is the infrastructure package, and that is just, it's called that, but it's really much, much more. And we've written about this several times on the terminal, but there's a hunger here for a package we're hearing could be $4 trillion, including massive changes to health, opening up a public option for Obamacare, a whole series of manufacturing, research and development initiatives to revive manufacturing in this country. So it's going to be very ambitious, whether it can get the votes. And of course, it's going to be a question of pay for it. This is really a big tax bill coming down, reversing some of the Trump tax cuts. It's going to be the big fight of the spring.
So is that what we see happening right now when it comes to the relief package going to be even bigger when it comes to this infrastructure package? I mean, are Democrats going to be able to get any Republican support?
Well, they're probably going to break it up because infrastructure actually cannot be done in the same budget process as they're doing this. There's an interesting ruling by the parliamentarian about an earmarked subway in San Francisco Bay Area that had to be kicked out of this bill. And the infrastructure bill will be filled with projects like that. They're designated by members for specific states and localities. So the preferred route is bipartisan. In fact, the President of the United States is meeting the bipartisan group of House members, including the top Republicans on the Transportation and Infrastructure Committee, as we speak, to try to drum up that support.
All right, so the Sunday talk shows, is it going to be about a relief bill already passed or getting ready for the president, or is it going to be a lot of negotiating by both sides? Just quickly, 30 seconds here.
Not a lot of negotiating, but I think the process might still drag out. Again, unlimited amendments. Rand Paul is promised infinite votes. I don't think he's got the physical stamina, but we'll see.
All right, good stuff. Eric, thank you so much. I know it's busy for you. Eric Wilson, congressional reporter at Bloomberg News, on the phone from Washington, D.C., a reading of it.
Can you believe? Are you going to watch? You're going to listen?
No, but I don't know. We have conversations at home about this. It's like these bills that, in basic thinking about them, there's kind of one key goal, but then there's all this other stuff that gets in that makes it 700, 800 pages.
And oftentimes lawmakers don't actually know everything that's in them.
Right. And to me, there's maybe some would say something wrong with that.
I'm not going to argue with that, Carol.
All right. Good stuff. All right. Let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, you were talking to Eric about this. The Senate is working on that nearly $2 trillion COVID-19 bill that's already cleared the House. Senators are slated to have what's called a vote-a-rama, where amendments to the bill will be considered. Republicans like Wisconsin Senator Ron Johnson say they do not like the bill's price tag. He's proposing the entire 700-page bill be read on the Senate floor, which could take up to 10 hours.
I feel bad for the clerks that are going to have to read it, but it's just important.
Senate Majority Leader Chuck Schumer says it'll give the public another chance to hear the plan. The maker of Marlboro cigarettes wants you to know that nicotine is not as bad for you as you might think, and it's turning to an unexpected source to help spread that message.
In a letter seen by Bloomberg News, Altria Group asks the Food and Drug Administration to tackle the misperception that nicotine causes cancer as part of a $100 million ad campaign. The company says 3 in 4 American adults incorrectly think it does, and convincing them otherwise could get them to switch to non-combustible alternatives. Cigarette smoke does contain more than 60 known carcinogens, but nicotine isn't one of them, though the National Institute on Drug Abuse has said nicotine is addictive and could make people more susceptible to opioid abuse. In Washington, I'm Nathan Hager, Bloomberg Radio.
Amazon is reportedly negotiating with the NFL for exclusive rights to some Thursday night football games. The Wall Street Journal reports Amazon and the league are talking about carrying games on Amazon Prime in a deal that could cost the e-commerce giant $1 billion a year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar along with Tim Stanovic. Just got about 45 minutes, roughly a little bit more than 45 minutes left in today's trading session. One of the things that we've been talking about a lot is some of the ETFs that we watch closely, and that includes Kathy Wood's flagship ARC Innovation ETF. 24% drop from its all-time high. That's at least the latest number from this morning. Has left her flagship ETF in the red so far. So basically erasing 2021 gains. I think yesterday we talked about a 20% correction in that. Listen, you and I have talked with Kathy. She was on our air. She's been on Bloomberg Radio with us many, many times. She is someone who sticks to her guns when it comes to her investment ideas. And they are long-term plays. And we know that when she was on with us, a week ago, when she talked about Tesla and the drop, she's like, I'm buying more shares.
Yeah, she did. And look, she also said that she has a 5-year time horizon for these. And, I think people know that who buy into these ETFs. And the other part of this is what she said, and what we've been repeating since that, Carol, is that this is not a straight line up. No. That's what she says.
But, some of the things that we talked about with her is her exposure to some of those names that are maybe a little frothy. And Tesla is one of those names that we've been seeing a significant pullback. And so she's got exposure to it. And so that makes sense that you're going to see some of her funds back off. It just depends how far those corrections go for some of those names.
Well, another ETF that we are keeping an eye on is one backed by Barstool Sports' Dave Portnoy. The ETF ranks among the most active debuts on record. This ETF is looking to ride the companies most loved by investors online. $350 million worth of shares in the ETF changed hands by a little after noon today. That's according to data compiled by Bloomberg.
Love the ticker. Buzz is the ticker. Listen, first of all, it's just kind of wild to see. They're basically playing, right, some of those companies that have been in the news a lot.
Yeah, it follows an index that uses AI to scan online sources like blogs and social media to identify the 75 most favorably mentioned equities.
DraftKings, Twitter, Ford, American Airlines, Facebook, these are some of the names in it. So we'll be tracking this one certainly for days to come. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Sell-off on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. The Dow, the S&P, Nasdaq all lower. 10-year yield 1.54%. Lots going on. Stocks have recovered some of the losses. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Fed Chair Powell sent stocks lower today, with the Dow currently down 454 points. S&P's dropped 60, and Nasdaq is lower by 289. Like you said, the U.S. 10-year yield jumped to 1.54%. Gold is down 15, and transports fall 311 points. Among the main 11 S&P sectors, only energy and telecom are in the green. Tech and materials were under pressure. And leaders to the upside in the Dow, UNH and Chevron, while Home Depot and Disney led to the downside. In deal news, Square to buy a majority stake in music streaming service Tidal for $297 million. And in other news, GE got a street-high price target of 17 over at Morgan Stanley. After earnings, Kroger rose as much as 4.2%. And wrapping things up, some of the names reporting after the bell tonight include Broadcom and Costco. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've got a little check on tech right now because Twitter having a plan to fact check tweets. I think this is something you guys talked about on Quick Take, right?
Well, you know, I got to be honest. We were trying our hardest to get Kurt on the show today.
We'll
and
see.
I think he was busy, which is okay, Kurt, because we got Kurt now.
Yeah, but thank God you mentioned it. Bloomberg Tech reporter Kurt Wagner joining us on the phone. We're going to talk about Twitter. We're also going to talk about Square doing a deal in the music industry. But let's start with Twitter. Fact check tweets. Tell us about this and their plan. Is it a good one?
Because oftentimes when you think of fact checking, you think of the route that Facebook is taking, which is they're partnering with, outside experts, right? But Twitter's idea here, it's called Birdwatch, and what they want to do is turn all of their users into pseudo fact checkers. And so if you're on Twitter and you come across a tweet that, looks like it needs more context or it needs additional information, you can actually submit a note that could be attached to that tweet and kind of, fact check it yourself. And so they want to turn their entire user base into pseudo fact checkers.
Okay, so Kurt, when I think about this, I think of Wikipedia, and this is a place where that actually works pretty well on Wikipedia, but it doesn't translate to other corners of the internet. It hasn't worked well to stop disinformation from spreading on the platforms that you write about so much. What makes Twitter think it'll work on Twitter?
Well, I think that they would argue that they already see people doing this. They just don't do it in this exact format, right? I mean, how often have you seen someone reply to a tweet and say, hey, this is wrong, or hey, you didn't mention X, or they quote tweet it, right? And they add their own commentary that way. So Twitter would say, hey, listen, people are already doing a version of this. We just haven't really, built it as its own kind of fact-checking product. And they think that if they do that, they can kind of take all of those inputs that people are already providing, but just make them easier for other people to find.
So one of the challenging things about this, about fact-checking on Twitter as it stands now, is oftentimes the tweet with the misinformation gets retweeted and so many more times, and it gets so much more engagement than any corrected tweet or any sort of fact check that is a reply. How does Twitter handle that?
Well, in this instance, so imagine 100 people submit a note for a particular tweet, right? Twitter would use an algorithm to basically pick the one or two most helpful replies to that. And then they would actually append those notes to the original tweet. So in theory, anytime that tweet is sent around, if it's retweeted, even if it's screenshotted, somehow they want those notes, those replies, to exist with the original tweet so that you would see them side by side. It's a little bit clunky right now because, again, it doesn't exist just yet. But at least in theory, all of the notes and the fact checks would kind of ride along with the original.
You know, it's funny when Tim said Wikipedia, I thought of that too. And I also thought of Waze, like this whole idea of community involvement. Like, you know, you're saying when there's a cop around or there's a traffic accident or, you know, like you don't have to be a part of it, but you do. You kind of want to help out. Could this possibly set the stage for a model going forward for social in terms of policing itself?
I think that would be the hope. If this does work, I mean, why not implement this on Facebook, right, or Instagram? I think that we're looking right now at a bunch of regulators in Washington who want to change the rules around speech online, and we're seeing companies try to come up with creative ways to, you know, basically appease them without necessarily changing the rules. And so I think this is one of those examples where Twitter's saying, hey, we're gonna give this a shot. And if this works, maybe this is the best way to fact check or police, you know, these big platforms online, and we'll do it, and we'll let, you know, the regulators decide whether or not they want to require other companies to do the same.
Hey, Kurt, I want to hit on another story that you filed earlier today about the music service Tidal. Square buying the company for close to $300 million in a stock and cash deal. When I tweeted this out this morning, Kurt, somebody replied to me and said, oh, I had forgotten about Tidal, that it even existed. This is, I think, a head scratcher of a deal for a lot of people. What is Square going to do with Tidal? Oh, and I'm kind of bearing the lead here. Jay-Z is joining Square's board.
Oops.
Right. Yeah, you may have heard of Jay-Z before. Yeah, he's going to be involved now. No, I think it is a little bit of a head scratcher on the surface, but I'll kind of explain how Square is thinking of this, right? Which is that they're saying, listen, we have built an entire business around helping entrepreneurs, small businesses, you know, build their business. Well, musicians are entrepreneurs as well, and they're trying to build a business. They're trying to sell merchandise, they're trying to sell tickets, albums, whatever it may be. And so they see this kind of as an extension of what they already do, but into a new industry. Now, the question is, did they need to buy a streaming music service in order to do that? I would say probably not. But when you really think about how much money this is, it's a very small amount of money for a company like Square. And if they can get someone like Jay-Z on their board and get someone like Jay-Z involved in kind of this idea of commerce around music, you know, that might be a $300 well spent. So it's a little early to tell, but it is a bit of a head scratcher, but you could see, I guess, in theory, maybe where they're thinking.
You don't sound convinced, just quickly.
I'm a little on the fence, but, you know, I know that CEO Jack Dorsey and Jay-Z are buddies. And so part of me wonders how much of this is, you know, one friend buying another friend's company. But again, it's a small amount of money for Square, so maybe it's a bet worth taking.
Right, exactly. All right, Kurt, thank you so much. Kurt Wagner, technology reporter at Bloomberg News, joining us on the phone from San Francisco. But it is interesting to see some of these kind of collaborations, certainly what I would consider the new tech type of companies.
Also some cool pictures that Square released earlier today of Jay-Z and Jack Dorsey.
I want to be on that board. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And I'm watching the markets, Tim. We've bounced off our lows, but we're not far off of them. And that's kind of been the day we are having.
Look, Fed Chair, comments from Fed Chair Powell, tech sell-off. Charlie's going to get to that in just a second. I got to tell you, Dave Wilson's coming up.
Yeah.
This would be a great day to play a little Jay-Z. Okay? I'm just throwing it out there.
Yeah, let's see if it happens.
All right, we'll see.
Right,
I'm ready.
All right, Charlie, all yours. We've got about 29 minutes to the close.
Indeed. Let's put that bounce in perspective. Worst level of the day, the S&P was down 96, down 2.5%. Right to the numbers. We'll give you the why in a moment here. S&P is now down 51. That is a drop of 1.3%. Back on the plus side year to date, we've got Nasdaq down 258 right now, down by 2%. Worst level of the day, Nasdaq have been down 443. Even so, Nasdaq now negative for all of 2021. The Dow lower by 357, down 1.1%, just about halving its loss of 722 points earlier in the session. All important 10-year yield 1.53% right now. Stocks and bonds sold off after Fed Chair Jay Powell underwhelmed markets by refraining from pushing back more forcefully against the recent spike in Treasury yields. The gauge on track for its lowest close in about 5 weeks. Gold is down 0.8%, $16.98 the ounce. OPEC Plus keeping a tight squeeze on output, sending oil higher. West Texas Intermediate up 4.7%, $64.18 a barrel. One of the ongoing questions for COVID researchers, and indeed people who have received both doses of either the Pfizer or Moderna vaccine, is, can I get other people infected? Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health.
If we look at the data out of Israel, which has some of the world's best vaccination coverage, it does seem to reduce substantially the potential to transmit virus, up to 94%. And that data continues to emerge out of Israel, providing us data on how we believe that you will likely not be able to transmit the virus. So 2 vaccinated individuals can certainly congregate together. When you get discordance, 1 vaccinated, 1 not, we're still recommending that not occur at this time.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names, Pfizer shares, they're down 0.8%. German partner BioNTech lower by 2%. AstraZeneca down 0.2%. Moderna up now by 0.4%. Johnson & Johnson on the minus side by 2.4%. Delta Airlines says it expects that domestic travelers will return in sufficient numbers this summer for the carrier to become profitable in the third quarter. CEO Ed Bastian spoke this morning with Bloomberg Radio and Television. Delta shares down 4.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Blockbuster album for them, wasn't it?
Yeah, well, certainly that song was a hit. No More Tears, in parentheses, enough is enough. And
it was
that
huge.
would, in this case, explain why I picked the song. But I digress. I could really digress and talk about the relationship between Donna Summer and Bruce Springsteen, but that's a whole nother matter.
Oh, wait a minute. You can't put that out there and then just drop it, buddy.
Donna Summer had a song on one of her later albums called Protection.
Okay.
Written by Bruce.
Huh.
And I've actually heard a demo recording, through the wonder of bootlegs of that particular tune with Bruce and the E Street Band. But again, I digress.
Bruce is like the Kevin Bacon of music.
Yeah. Maybe so.
All right,
what's
the chart of the day?
Enough is enough. That's sort of how Credit Suisse is arguably looking at small cap stocks, and it's something that Andrew Garthwaite, a global strategist over at Credit Suisse, pointed out in a note he had out. He's sort of backing away from smaller companies, not just in the U.S., but also in Europe, suggesting that investors basically just keep them in line with market benchmarks as opposed to, throwing a whole lot of money at them. In the case of the U.S., what he did is he looked at a ratio between the Russell 2000 and the S&P 500, which, by the way, has been up as much as 31% since the end of the third quarter, and then compared that with an economic indicator, specifically the New Order Index compiled by the Institute for Supply Management. And, that's one way you can kind of tell what's going on in the broader economy. And you saw that indicator jump up last year well before you saw the show of relative strength in smaller companies. And basically there's been a catch-up going on there in the last couple of months as Garthwaite sees it. And he figures, well, okay, things have finally kind of gotten back to what they should be, looking at the relationship between, the ratio and the ISM New Order Index over time, which the chart does going back to 2011. They tend to move together. And in this case, they did not, at least not initially. The smaller company shares are playing catch up. And as he sees it, enough is enough in terms of really being favorably disposed toward the small caps. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Okay, maybe it's just late in the week. So what's the connection, though, between small caps and ISM, their new order index?
Well, think of that particular ISM gauge as an economic indicator.
Okay.
You figure if the economy's on the upswing, that smaller companies would tend to do well because a lot of them are more domestically focused, and that their shares would reflect that. And it just didn't happen right away, at least not in relative terms when you look at them, the Russell 2000 versus the S&P 500.
Right.
And in the last, 4 months or so, or maybe 5 months, that's changed to the point where smaller companies no longer look like the bargain that they were before. That's sort of Garthwaite's argument in a nutshell.
Interesting. And the other thing I would say about the ISM, I'm thinking about what we talked about with Joe Weisenthal yesterday, and even later on we're going to talk about Broadcom and chips. We've been worried about chip shortages, but some are saying that we could see a lot of companies kind of order ahead just in case to make sure that they don't run out, and then you're going to have, you just got to be careful about how you look at supply and demand.
Too many chips, maybe? Which would be a big difference from what we saw a few weeks ago.
Right. From there's none to all of a sudden we have a glut.
Yeah.
So it's interesting things to think about. Dave, thoughtful chart. Love it. Although we were expecting some Jay-Z.
Sorry.
I know. Maybe next time.
99 Problems, then, in the intro song is one, I guess.
Oh,
good.
Dun.
Do it.
Dave Wilson. Dave will be back a little bit later on with his stock of the day.
Let's get a check of world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Hey, Tim. Newly confirmed Agriculture Secretary Tom Vilsack says he plans to move swiftly on initiatives to lower carbon emissions from farms. And he tells Bloomberg's Balance of Power it will keep our farmers in the game.
Both domestically and internationally, we're going to continue to have difficulty selling what we grow if we can't prove that it's been sustainably produced. A net zero emission agriculture would put us in a position, I think, a competitive position, both domestically and internationally, to sell more.
He also expects farmers to benefit from an expansion of SNAP benefits included in the latest relief package. He expects that more demand will help the bottom line for farmers. Well, bad news for those who believe in American exceptionalism. Bloomberg's Karen Chase explains.
For the first time in 8 years, the U.S. is not the world's most attractive destination for international workers. Canada has taken over the top spot, according to a global survey of over 200,000 workforce respondents in 190 countries. The U.S. still ranks first for remote work. Among American cities, New York fell from number 2 in 2018 to number 8 in 2020. Los Angeles fell from number 7 to number 12. The only city to rise in the ratings was Seattle, which climbed from 50th to 49th. Karen Chase, Bloomberg Radio.
A firm hired to monitor Texas's power market says the region's grid manager overpriced electricity for almost 2 days during last month's energy crisis, resulting in $16 billion in overcharges. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio at Bloomberg headquarters in New York City. So, fun story by Vildana Hyrik and Lou Wang on the Bloomberg terminal. And the first line on the story says it may turn out that 5 new special purpose acquisition companies, SPACs, per day was just too many.
It's the lead of the day, I think. I mean, I love that opening line. SPAC mania is showing signs of hitting a stock market saturation point. An index that tracks blank check flyers, these SPACs, suddenly down about 20% from its peak. Hey, you know...
Hey, you know what?
Well, there are certain times... I haven't followed too many market cycles, but there are certain times when it does feel like things are getting a little overcrowded. And when you have so many celebrities getting in on the action of SPACs, when it was something that, yes, it's been around for years, but it's something that really reached a lot more popularity in 2020 and even early this year, people start to scratch their heads and say, wait a second, it seems like anybody can do one of these. Is this a peak?
And is it just anybody doing one of these? And like, where's,
Seems like it, right?
Exactly. And listen, we've seen, as you said, famous executives, athletes, PE giants, venture capital firms, everybody rushing into the SPAC market. Listen to this. In the first 2 months of 2021, 175 SPACs sold. Initial public offerings are roughly 5 deals per trading day, according to some data out by Goldman. In February alone, 90 SPACs raised $32 billion, a monthly record.
Should the current pace of issuance persist, this year's offerings will surpass the full year total of 2020 before the end of this month.
Okay.
That's according to Goldman Sachs.
Okay. Mania, we ask? The pace of money raising from SPACs has far exceeded the heydays of traditional IPOs during the .com era. So there's your perspective, right?
What do you think?
Well, I just think it is a lot of money, potentially chasing a lot of stuff. They've got to put that money to work, right? They have to buy companies, especially if it's kind of set up as an investment. So I do wonder if, first of all, does it mean you have a lot of money chasing a few targets, and what that does to the price of things?
We'll find out soon.
Yeah, we will. Anyway, we're watching. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks, narrow losses from Bloomberg World Headquarters. I'm Charlie Pellet. We're still looking at a down day on Wall Street, well off session lows, though. The Dow, the S&P, and Nasdaq all in the red so far for the year. Nasdaq, yes, for the year, is now lower by 1.2%. S&P switching from red to green, up by 0.3%. Talking about the year-to-date numbers, the Dow Jones Industrial Average up 1% on the year. What's going on today, Charlie? We have got the S&P down now by 1.3%, lower by 51 points at the worst level of the day. The S&P have been down 2.5%. The Dow slumping 367, down 1.2%. Nasdaq down 272, a drop now of 2.1%. 10-year yield 1.53%. Stocks and bonds sold off after Fed Chair Jay Powell underwhelmed markets by refraining from pushing back more forcefully against the recent spike in Treasury yields. The price of gold down 0.8%, $16.98 the ounce, and West Texas Intermediate crude rallying 4.6%, now $64.10 a barrel. OPEC Plus keeping a tight squeeze on output, sending prices higher. After the bell, lots of earnings among the companies that we're scheduled to be hearing from today. Costco down now by 1.4%. Gap out of San Francisco down 2.2%. Broadcom, AVGO on the ticker there, lower by 3.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 11 minutes left in today's trading session. We are seeing stocks certainly off their lows of the session, but definitely off their highs of the session as well. Let's see what our next guest has to say. Brian Jacobson is with us, multi-asset strategist at Wells Fargo Asset Management, $603 billion in assets under management, with us on the phone from Milwaukee, Wisconsin. Hey, Brian, good to have you here with Tim and myself on Bloomberg. Got to start with technology. How do you see the pullback in tech stocks? What does it say to you?
Yeah, thanks for having me on.
Sure.
The pullback in technology, we actually weren't really all that surprised about. The way my team has been positioning portfolios has been really more favoring the what has been dubbed, the reopening trade, as far as, people getting a little bit tired of doing their, video meetings and things like that, might actually want to get out and see people face to face.
So does that mean selling tech names, or just not adding to positions?
Well, our approach is to not focus on individual names, but as far as like the futures contracts and the broad indexes. And one of our favorite trades has been going longer the small cap stocks and then shorting larger cap stocks. And we did take off our trade, which was long Nasdaq, a few weeks ago. And so it's not necessarily outright shorting it, except for to the extent that the kind of positioning as far as favoring smaller cap stocks over larger cap stocks is reflecting a short bias towards some of those names.
Hey, what did you make of Fed Chair Powell's comments today? He said in an online event that he'd be, quote, concerned by disorderly markets, but he stopped short of offering steps to curb heightened volatility. What do you make of it?
I think that, like a lot of people, are just a little disappointed. I wasn't really expecting him to come out and say, hey, we're going to do yield curve control, or we're going to actually go out and extend the maturity of our portfolio. But his unwillingness to be a little bit more forthright or to commit to doing something, I think got people a little bit nervous. Their policy meeting is coming up on March 17th. And so a lot of people are going to be kind of looking, or we're looking to this as being maybe one of the last opportunities before the meeting to get some indication about whether or not they're actually going to do something about the rise in the longer term yields that we have seen. There's a lot going on in the Treasury market as far as with increase in inflation expectations, people getting excited about the growth outlook, so that can push up real interest rates. And then plus you also have issues going on with, say, the supplemental leverage ratio that the Fed still hasn't taken action on, as far as, the way that banks calculate one of their leverage ratios that could possibly affect the Treasury market as well. So there's a lot going on there. And so understandably, there's quite a bit of bond market volatility.
There's nothing going on, Brian Jacobson. There is a lot going on. And I do think we're trying to understand, is the Treasury market kind of catching up to the run-up that we've seen off of the lows on the equity side of things? Is the Treasury market getting ready for, it's going to be better in the second half of the year. It doesn't mean it's going to be a runaway market. We still have millions of people out of work, and I do wonder how much you anticipate that holding back economic growth, or it won't, and we'll just continue to see even deeper moves in that K-shaped recovery, and we'll see that reflected in the financial markets.
Well, hopefully, as the economy reopens, and with the Federal Reserve staying very loose for a long time and focusing on the shadow unemployment rate, or whatever you might want to call it, as far as, the idea that a lot of people are being misclassified, so it's closer to 10% as opposed to the 6% that's being published, is that maybe that can help close the K a little bit to make it a little bit more of a V for more people.
Hey, I want to hear your thoughts on international relations right now, because you said that big wild cards when it comes to the market could be relations between the U.S. and China, and the U.S. and Iran. What could happen? Let's start with China.
And maybe this is just because just looking at what are some of the old fears, trying to recycle some of those as well, because they really haven't gone away, right? We know that at the beginning of 2020, one of the big concerns was the relationships between U.S. and Iran, and just under President Biden now, as far as with the rocket launch in Syria, it's like, what's going to be happening next in the Middle East? It's kind of always a wild card there. And then as far as with the relationship with China, we know that President Biden, our expectation was that not much was going to change, except for perhaps the tone and the willingness to work through more of the multinational, or the kind of in a concerted effort with our allies on some of these incredibly important topics with China. Now, obviously, the economic numbers have been just outstanding, but we do think that that's always one of those things that you can worry about, as far as what will that relationship look like going forward. The U.S. has already shown it's willing to impose sanctions. The President Biden has shown that he's willing to impose sanctions on countries that aren't necessarily abiding by the rules of the road.
Well, is there a trade here for you on that, or concern about it?
Well, a little bit. One of the ways in which we're positioning our portfolios is that we still do like emerging markets, but emerging markets, it's a very broad area. Right. And while China, we think that has done very well. If you think about EM Asia, is it EM Asia ex China that is the more attractively priced area? If you think about momentum that's been favoring China, but from like a valuation, not that valuations always matter too much, but as far as, the fundamentals with the earnings, there are other areas, like let's say with India, Indonesia, Korea, other places within the Asia Pacific region that are probably a little bit more attractively priced for us.
All right, going to leave it on that note. Listen, thank you so much, Brian. Appreciate it. Brian Jacobson, multi-asset strategist at Wells Fargo Asset Management. We did cover a lot of asset classes there. He's got about, or Wells Fargo, I should say, about $603 billion in assets on the management. Brian joining us on the phone from Milwaukee. He mentioned emerging markets. I'm just looking at the MSCI Emerging Markets Index. It's off about 7% from its recent high. So we have seen, like a lot of the other markets, a bit of a pullback.
One thing I didn't get to ask him about was Bitcoin and how he's thinking about Bitcoin. Bitcoin lower by 5.4%, but still $48,000.
We've got the closing bell coming your way in just about 3.5 minutes time. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletta. Sell-off on Wall Street as we await earnings from Broadcom, Gap, and Costco. Folks from Ring the Bell for Gender Equality, ringing that closing bell. And this update is brought to you by Witham, a forward-thinking advisory and accounting firm offering industry expertise and innovative solutions for your business. Experience the Witham way. Innovative, adaptive, effective, trusted. Visit Witham.com for more. Right to the numbers, because that's what you need to know right now. S&P lower by 51, down 1.3%. The Dow tumbled 346, down 1.1%. Nasdaq down 274, lower by 2.1%. At the worst level of the day, the Dow had been down 722 points, down 2.3%. S&P turned negative on the year before reversing course. So far this year, it is up 0.3%, but Nasdaq this year now lower by 1.3%. Stocks and bonds sold off after Fed Chair Jay Powell underwhelmed markets by refraining from pushing back more forcefully against the recent spike in Treasury yields. Brian Jacobson is multi-asset strategist at Wells Fargo Asset Management.
You know, his unwillingness to commit to doing something, I think, got people a little bit nervous. You know, their policy meeting is coming up on March 17th, and so a lot of people are going to be kind of looking, or were looking to this as being maybe one of the last opportunities before the meeting to get some indication about whether or not they're actually going to do something about the rise in the longer-term yields that we have seen.
Bottom line, U.S. stocks fell for a third day. Nasdaq 100 erasing its gain for 2021. The mall owner Washington Prime Group preparing a potential bankruptcy filing as time runs out to avert a default. Shares of Washington Prime Group, WPG on the ticker there, down by 60%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, folks. You're listening to Bloomberg Business Week. Carol Master, Tim Stanovic, and joining us is Bloomberg News cross-asset reporter Kriti Gupta. We're going to get to her in just a moment. We did mention, Charlie mentioning U.S. stocks falling for a third day. Nasdaq 100 erasing gains for 2021. I have a feeling, just based on what we've seen so far in the 2 months of 2021, a lot of back and forth, and maybe that's going to continue for some time. S&P 500 today, overwhelmingly, investors not looking to take on risk. 96 names in the S&P 500 showing gains today. 409 lower, Tim.
Yeah, diving a little further into the S&P 500 and the Bloomberg industry groups. Look at this. Energy up 2.48%. Communication services pretty much flat. Everything else in the red today, Carol. Judging by what happened on the Nasdaq today, you wouldn't be surprised that information technology is the worst performer of the industry groups, down 2.26%. Materials down 2.05%. Consumer discretionary down just about 2%.
And you mentioned energy atop that list in terms of the major industry groups. I mean, crude oil up about 5% today. We've seen, we've been watching some of the headlines coming out of OPEC in terms of supply levels and production levels. And so, you understand that energy trade either at the top or bottom of our major performing groups. We see that a lot over the last year. Hey, Kriti, come on in as we await for some earnings from Broadcom, also Gap, Costco. We just had a headline crossing CoStar Group withdrawing its bid to buy CoreLogic. So that just crossing the Bloomberg. What's been standing out for you in today's trade? Let's talk about tech. What are you noticing?
Oh, just all the pain, right? I mean, can you really miss all the red on the screen? I think what's interesting here, though, is that you're seeing all tech trade as one big kind of group. So you're seeing the big tech heavyweights, you're seeing semiconductors, you're seeing some of the old guard stocks like Oracle and HP, all trade like it's one big group of tech. And I think there's a little bit of nuance in terms of you've got your Amazons, your Apples, your Microsofts with these massive kind of cash balances that they're putting towards electric vehicles and streaming. You have your kind of tech adjacent trade like Airbnb, your Pinterest, your Snapchat. And then you also have, your semiconductors, or like I mentioned, the old guard stocks that have a little bit more to do with physical hardware or software. all of that kind of getting under this big branch of growth stocks. And I think that's a really interesting dynamic to pay attention to.
Can I just point out, though, Google was up 1.1% today. Facebook was also up a little bit.
Well, one company that wasn't was Tesla. And over the last 30 days, Creedy, Tesla down 27%. What's going on with Tesla?
I mean, your guess is as good as mine. What always goes on with Tesla? It's turned into such a risk sentiment indicator, which I think is fascinating because not too long ago, we were talking about Tesla as this kind of crazy retail-driven trade, and now you're seeing it actually not influence the entire S&P 500 and actually see correlations with other asset classes like Bitcoin, for example. So I think that's a really interesting thing to keep about Tesla from a macro point of view. But I think the fact that you're seeing Tesla also grouped into this kind of tech frenzy when, of course, we know that debate between is Tesla an automaker, is Tesla a tech company? What exactly is it? It looks like, according to today's trading, we're counting it as a tech name.
And let's not forget, it was up 743% last year. Just a little perspective.
It's good perspective.
I'm just saying,
Fair enough.
Just in terms of, there is a point where you take a look and people do fundamentals. Kathy Wood would say the same thing. She, she's talked to us about buying into Tesla and some of the dips. You've got your long-term strategy on a play, and there's going to be pullbacks at different times. Speaking of Kathy Wood, we've been watching the ARK Innovation. That is her flagship fund. It's down another 5% today.
It absolutely is. And I think this is such a fantastic example of the point I was making earlier, this idea that all of tech is kind of trading as this one big bundle. And if you actually dive into the Bloomberg terminal and see what's actually inside this fund, she's picked some really interesting names to include in here. So it's not just your Teslas and your Squares and your Rokus, which of course make the bulk of the fund, but you also see some like ADRs in Chinese tech companies. And I think what's interesting is that when the tech side falls here in the States, it's almost directly going to translate over into the Asian session. And that's something that I think will be interesting to look forward to in a couple of hours. How much pain does the Chinese tech names go through now? I mean, one of Dave Wilson's favorite charts that he likes to point to is the Nasdaq Golden Dragon Index. And it sounds like a very cool name, but it's the Chinese ADRs essentially that are listed in the US. And a lot of them, 75% of the index, are all tech. And I think that's an interesting thing to keep in mind because here we see some tech pain, but that could very easily become a global story.
ARK Innovation down now, I think about 24% from its high back in February. So we'll continue to keep an eye on it. Hey, Creedy, thank you so much. Creedy Gupta, Bloomberg News cross-asset reporter. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr.
Hey, Dave Wilson, come on in here. Give us your stock of the day.
Vroom.
I like it.
Well
Vroom
done.
is an online seller of used cars. The company makes deliveries to buyers and picks up vehicles from sellers rather than making people go to dealerships. Vroom was founded in 2013 and went public last June. The ticker is VRM. Now, the company made its initial public offering at $22 a share. The stock more than doubled on its first day of trading. Since then, it's been up and down. Vroom had a down day today, reflecting disappointment with the company's bottom line. Fourth quarter results showed a wider loss than analysts expected in a Bloomberg survey, and its first quarter forecast called for an even wider loss, which analysts weren't looking for. Vroom may be suffering from a push to expand, according to Jefferies. The firm said capacity limits are forcing the company to cut prices or sell vehicles wholesale, hurting their ability to make money. Now, all this sent Vroom shares as low as $29.70. That was the lowest price aside from the IPO. The shares closed at $31.61 to post their biggest ever loss. They were down 28%. On the nose.
Yeah, and before this, they were actually showing a gain because they're now down about 23% this year. So that, that's a tough one.
It absolutely is. It's one of these fast-growing companies. They compete with the likes of Carvana.
Yeah.
And it's a tough business because they got to be able to make money in the end. That's a real question.
All right, Dave, thank you so much. Really appreciate it. Dave Wilson there. You're done.
I'm done. Just for the day.
Until tomorrow.
Don't worry, I'll be back tomorrow.
I know. Tomorrow will be Friday. Have a good evening.
Thanks, you too.
Hopefully no traffic.
No traffic. Fingers crossed.
Fingers crossed as well. All right, let's get a check on world and national news. Over to Nancy Lyons in D.C. Hi, Nancy.
Hey, Carol, the Senate has begun debating the $1.9 trillion virus relief package, with Vice President Kamala Harris casting a tie-breaking vote to advance the discussion. Well, while the Senate takes up the stimulus package, President Biden is moving ahead on infrastructure. He and Transportation Secretary Pete Buttigieg met with a bipartisan group of lawmakers today to discuss why that needs to be their next challenge.
It's not only creates jobs.
The White House is explaining more about President Biden's suggestion that the decision to fully reopen Texas and Mississippi was motivated by Neanderthal thinking. Biden's press secretary Jen Psaki addressed that today.
What everybody saw yesterday was a reflection of his frustration and exasperation, which I think many American people have.
Psaki says the president has asked Americans to diligently wear masks for his first 100 days in office while vaccinations ramp up. She says that's 60 more days, and the administration is hopeful that businesses and people will also aim for that goal. During a legal conference today on whether House Democrats will have access to Donald Trump's tax returns, the president's attorneys told a judge they believe he remains protected as ex-president, while House attorneys say they've already satisfied the standard set forth by the Supreme Court for a sitting president to comply, much less an ex-president. The judge did not indicate where he stands on the issue. Global news, 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. It is Bloomberg Business Week. I am Carol Masser in our Bloomberg Interactive Broker studio. Charlie Pellet joining us. And Charlie, Paragon Sports. We've all been there,
yeah,
right?
We absolutely have. And, first of all, just let me explain where Paragon is for our out-of-town listeners. This is right in the heart of New York, in a sense that this is a place where real New Yorkers go in a real New York neighborhood, just off Union Square, roughly 17th, 18th Street on Broadway. If you're visiting New York, somehow get to 23rd Street, take a look at the Flatiron Building, walk down Broadway, you'll go right past Paragon Sports, continue down University Place, Washington Square Park. That'll take you to Soho, Little Italy, Tribeca, but I digress.
Well,
it's a great sporting goods store with an amazing history.
I love you talking about it. It's a guy who loves New York, as we all do. And Paragon Sports, though, saying it's 113 years old. It has weathered one pandemic before COVID-19. But it has cut more than 200 employees. That happened in April. That's about 70% of its staff. Most of the reduction is permanent, according to the company's CEO. They told that to us in an interview. Company also parted ways with a further 44 in January. Some loans from the PPP program helped retain some of those workers. But listen, this is a place where tourists go, generations of New Yorkers. But listen, foot traffic in New York, Charlie, we've seen it. It's just not happening.
Absolutely right. Not just the tourists, but also students. You got NYU that has dorms right around just off Union Square there. New Yorkers go there either to protest at Union Square or just to sit there and enjoy the pigeons. There's a kids' playground there. You've got a lot of retailers right around the corner there. So it's a popular place with real New Yorkers. And just to put this store in perspective, before there was Sports Authority, now defunct, before there was Modell's, now defunct, before Dick's Sporting Goods, before Lululemon, before Under Armour, there was New York's Paragon right there on Broadway at 18th.
And listen, they've tapped into, like a lot of retailers, into e-commerce, Charlie, and sales have increased, but it's just not enough for the lack of in-store sales. And they still see that's the way they're going to do it going forward.
Indeed. Fantastic store, wonderful story, and yet a sad story.
Yeah, all right. Charlie, thank you so much. Definitely a piece of New York. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. We begin with breaking news on Broadcom. First quarter adjusted EPS $6.61, estimates there $6.57. It does see second quarter revenue of about $6.5 billion. Estimates were for $6.62 billion. Costco reported revenue for the second quarter that beat the average analyst estimate, and just reporting now, Gap fourth quarter total comparable sales 0%. They were expecting an estimate there of 2%. So Gap's fourth quarter EPS coming in 61 cents a share. Lots of earnings. We're taking apart those numbers. Turned out to be a down day on Wall Street. That's putting it mildly. Stocks did finish well off session lows. However, stocks and bonds slumped after Fed Chair Jay Powell underwhelmed markets by refraining from pushing back more forcefully against the recent spike in Treasury yields. 10-year yield 1.54% right now. Tech-heavy Nasdaq 100 index extending its decline from a February peak to almost 10%. Russell 2000 down 2.8%. S&P down 51 points today, a drop of 1.3%. The Dow down 345, down 1.1%. Nasdaq lower by 274, down 2.1%. Gold down 0.7%, 16.98 the ounce. West Texas Intermediate crude surged 4.85%, 64.25 a barrel. Again, recapping, stocks lower, 10-year yield 1.54%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks for the update. You're listening to Bloomberg Business Week. Want to mention and go back to something Charlie talked about, and that is earnings out from Broadcom. They just crossed moments ago. Stocks down about 1.5% in the after hours. Let's get some analysis, what you need to know, and then more broadly about what it might tell us about what's going on in the semiconductor industry. Anand Srinivasan is back with us, senior semiconductor and hardware analyst at Bloomberg Intelligence. He is with us on the phone from New Jersey. So, Anand, I know the numbers just crossed the Bloomberg. First quarter adjusted EPS, 661. That is, 4 cents better than what the street was expecting. And talking about the second quarter, they're looking for revenue of 6.5 to 6.62 billion. I don't know. How does this quarter look? What do we need to know about it?
So this quarter was fine. I think there may have been some constraints in terms of products to try and maximize their revenue potential. I'm sure that they were crimped in the more recent quarter and in the second quarter of fiscal 21 for them. So I think given those constraints, I think this was very respectable numbers. Their 2Q numbers were 6.5 billion, and we keep referring to that 6.62. That 6.62 is for Q1. Mm-hmm. So for the next quarter, they actually printed, or they're guiding to 6.5 billion, above consensus of 6.3 billion. So I think good, not blowout numbers by any stretch, but very respectable, and guidance seems to be hanging in there as well, slightly better than what people were expecting.
Listen, they were up about 39% last year. Remind us, these are the kind of chips that who's going to be buying chips from them?
So they have 4 different segments. One is they make chips for iPhones, but they're not processing chips. They're radio frequency chips. They're heavy-duty analog chips, specialty chips that interface between the processor and the antenna, if you may. So that's one piece of the business. Another piece of the business, perhaps higher margin than their iPhone chips, is the networking processors. Mm-hmm. And here, their processors are the de facto standard, go into routers from Cisco, go into equipment from Juniper, et cetera. And then they make enterprise storage gear, and they also make industrial and auto chips. Those are sort of smaller pieces of the pie. And remember that they're trying to diversify away from semiconductors, and they bought software businesses. They bought the old Computer Associate business. They bought the corporate side of the Symantec business. So their software business is also quite big and, more importantly, margin rich. So they're sort of a barbell strategy between semiconductors and software.
What are we seeing about the software side of the business?
Software side of the business is very steady Eddie. Okay. I don't think there are going to be too many surprises. The most volatile piece of the entire business is that wireless communication piece, and there the volumes can go up or down depending on iPhone, for example, and also based on seasonality.
Hey, so what do we need to know more broadly? Listen, people are, they're worried about chip shortages. The Biden administration's worried about chip shortages. Also, Ian King has a story of Bloomberg News saying that actually the chip industry beginning to worry over ordering, meaning people, stepping up now and doing double ordering and different things may end up resulting in a glut. Could we, this is an industry that can change pretty quickly, can it?
Yes, very volatile industry. Look, there are shortages, and I think the shortages are wide as they are deep. There is the serious risk of double ordering, particularly in a seasonally weak quarter that we're in right now. But the other thing, too, is if you keep your focus on sort of through the end of the year, right? I think demand this year for the whole year is going to be better than it was last year. I think handsets are going to do better. We think that the data center market is going to do better. We think PCs are going to remain strong. And if you put those three components together, that's about 70% of global semiconductor revenues. Autos make a lot of noise, but it's 10% of the business. So, we have to keep that in perspective. The things that we're worried about from a volatility perspective are PCs and smartphones. All
right, that's a good point, and good to get your analysis on it. And they certainly get the attention of lawmakers and policymakers, the auto industry. Anand, thank you so much. Really appreciate it. Anand Srinivasan, senior semiconductor and hardware analyst at Bloomberg Intelligence, with us on the phone in New Jersey. Shares of Broadcom, though, still down about 1.9% in the after hours. Do you want to mention Gap, also out with their earnings? Fourth quarter total comp sales, no change, no growth. The estimate was for a gain of 2%. Fourth quarter EPS of 61 cents a share. That includes some charges. They're undergoing a review of intermix operations. They took a charge of $56 million. We know that they're looking at some of the brands that they own. Athleta comp sales for the fourth quarter up 26% versus a gain. Versus up 37% quarter over quarter. And so quick check on shares of Gap in the after hours. Let me bring up the numbers. Little changed here. Costco also out. Second quarter EPS 214 versus 210 year over year. Total company comp sales, including gas, FX, up 13% versus an estimate of 10.4%. And that stock in the after hours, we're seeing it down about 1.4%.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I've got a simple question for you. If you could make some simple changes in your life that would help combat climate change, what are they and would you do it? We're going to talk about that and how those changes can make a difference. We're going to get into that with the president and founder of Habits of Waste. She's our guest in just a moment. Right now, let's get back to some of the news after the close, a bunch of earnings and more. Here is Charlie Pellet.
Hi, thank you very much, Carol Master. Here's what's going on. Let's begin with Broadcom. Shares down now by 6%. Broadcom, of course, the chip maker that supplies Apple and other big tech companies, delivered a forecast that was in line with Wall Street estimates. It said revenue in the 3 months ending April will be about $6.5 billion. That compares with an average analyst estimate of about $6.3 billion, according to data compiled by Bloomberg. Shares, however, trading lower now by about 6%. Also reporting Costco, it delivered revenue for the second quarter that beat the average analyst estimate, shares down 1.7%. And Gap reported total comparable sales for the fourth quarter that missed the average analyst estimate, but Gap shares up now by about 0.7%.
This is Mike.
A down day on Wall Street. Stocks and bonds sold off after Fed Chair Jay Powell underwhelmed markets by refraining from pushing back more forcefully against the recent spike in Treasury yields. S&P briefly erasing its 2021 gains. Today, the S&P down 51, a drop of 1.3%. The Dow Jones Industrial Average down 345, down 1.1%. Nasdaq down 274, a drop for Nasdaq of 2.1%. Gold lower by 0.6%, 1,700 even the ounce right now. 10-year Treasury 1.55% on the 10-year right now. And West Texas Intermediate crude rallying 4.5% today, 64.04 a barrel. One of the big questions for Delta frequent flyers has been when those middle seats will be sold again. Delta CEO Ed Bastian addressed that issue this morning on Bloomberg Radio and Television.
We're blocking it through April. We'll be deciding soon and announcing soon what our plans are as we head into the spring and early summer. At some point, clearly, we're going to start to sell those middle seats. Demand will require it. But we don't want to stop short of when customers really are comfortable getting out and traveling again.
Yeah, tough day for a lot of the airline names. Delta was down 2.9% today. UAL Corp down 4.6%. American Airlines Group down 4.2%. Southwest lower by 3% today. JetBlue tumbling by 1.6%. So again, recapping the 10-year yield, 1.55% right now on this Thursday afternoon. S&P down 51, a drop there of 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, much appreciated. Charlie Pellet there. You are listening to Bloomberg Business Week. Carol Master in our Interactive Brokers studio on this Thursday. And listen, we've talked a lot about the climate and climate change over the past year. Some good blue skies that we started to see, animals coming out, seeing mountain ranges for the first time as the economy unfortunately shut down because of the pandemic. And we've been talking a lot about the impact climate change is having on our world and how we can make some changes. So looking at how we can create better habits that help the environment and our climate is Sheila Muravati. She is president and founder of Habits of Waste. It's a nonprofit focusing on reducing environmental impact. She joins us on the phone from Los Angeles. Sheila, welcome to Bloomberg. Nice to have you here.
Hi, Carol. Thanks so much for having me.
Hey, listen, like a lot of our guests, I've got to first ask you, what's your last 12 months been like?
I mean, it's been quiet, I have to say. I was living a very intense life prior to the pandemic. I don't even know how I did it. I mean, I was a classic person that was burning the candle at two ends, and the pandemic just forced us into a very different lifestyle that, really made me think about a lot of things. So the environment is definitely at the top of the list.
Well, and it's interesting because of the pandemic, as I mentioned in the intro to this, is that like all of a sudden we talked about with people not driving to work and planes not flying, the environment got a lot cleaner. At the same time, we have been using a lot of single-use items, whether it's plastic cutlery and plastic bags or, masks one time. So it's kind of this dichotomy of different things going on. Tell us about what you are trying to do with habits of waste, and especially when I feel like we've all had a past year to really think about our impact, our footprint on society.
Absolutely. So I come into environmentalism with a little bit of a different angle. I studied sociology at UCLA and found it fascinating to understand human behavior and how to shift the behavior of the masses. So throughout the pandemic, food delivery applications went through the roof. So the increase in food delivery orders was about 250%. So what I realized is if we were able to convince people to only receive plastic cutlery upon request, how could we decrease the 40 billion pieces of plastic cutlery that are entering our waste stream every single year? So I was able to convince Uber Eats, Postmates, and Grubhub to swap that default setting so it's no plastic cutlery comes out anymore unless you ask for it. We're still waiting on DoorDash to jump in, and it's imperative that they join us because they had about 45% of all food delivery orders in 2020. That being said, we used technology to get to this point. We had an email campaign on our website at habitsofwaste.org where users could come in, send an email, and it would go directly to these food delivery applications. And I felt that if the food delivery apps knew that this is what we wanted, we have this junk drawer everybody has in the kitchen that they feel horrible about throwing away, yet it's filled to the rim with plastic cutlery. I mean, ask anybody, they've got one. So luckily, these emails worked, and we sent about 10,000 emails to date. And now we're just holding out for DoorDash, and then we'll have it all done.
It's amazing how, though, like I've got to say, we've gotten used to it and not getting cutlery, and don't miss it. I'm actually kind of grateful that we're not getting it, and silly for us for not kind of saying earlier on, like, don't put it in. But it became such a habit, right, of all the takeout places.
Right, and it's really about choice architecture. Like, how is it that we're just being bombarded with these habitual behaviors of waste without really getting a chance to even do better or bypass it, I spearheaded the first plastic straw and cutlery ban in history, which was in the city of Malibu. And unfortunately, banning plastic straws was a lot easier than banning plastic cutlery. So here we are trying to at least have it only upon request, and most people don't even want it. So it's a win-win. And by the way, restaurants are saving a ton of money. I'll give you this one really interesting fact. Postmates announced that within a year, they saved 122 million packs of cutlery from entering the environment, and that was an equivalent of $3.2 million in savings for restaurants. So, plastic is really important, but the next most important thing that I've ever done, probably in my whole entire life, has been trying to get more people to eat plants. Well, that is the single most important thing we need to do right now.
Well, it's interesting because just yesterday we were talking with the former CFO of Impossible Foods. We've talked a lot with the folks over at Impossible, Beyond, and elsewhere. Listen, sit tight for a second, Sheila, because we've got to do a little bit of news, but I want to come back and get your thoughts on that because in terms of farming and feeding the world, plant-based, many say that that's definitely got to be a big part of how we move forward. We're going to get back to Sheila Moravati. She's president and founder of Habits of Waste on the phone from LA, and that conversation, more of it in just a moment. Right now, let's get a check on world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The Senate is working on the nearly $2 trillion COVID-19 bill that's already cleared the House. Senators are doing what's called vote-a-rama, where amendments to the bill will be considered. Republicans like Wisconsin Senator Ron Johnson say they do not like the bill's price tag. He's also proposing the entire 700-page bill be read on the Senate floor, which could take up to 10 hours.
I feel bad for the clerks that are going to have to read it, but it's just important.
Senate Majority Leader Chuck Schumer says it'll give the public another chance to hear the plan. Agriculture Secretary Tom Vilsack says extending expanded SNAP benefits as proposed in that new stimulus package would have a broad impact on the nation's agriculture system. He spoke on Bloomberg's Balance of Power.
It would result in the ability of people to buy more at the grocery store. And the more they buy, obviously, the more that needs to be stocked and shelved, packaged and processed and transported and grown. So it's everyone in the supply chain that would benefit from an increase in the SNAP program.
Vilsack has said we all benefit when we have nutrition and food security. The U.S. has agreed to suspend millions of dollars worth of tariffs on UK exports, including Scotch whiskey. It's part of an effort to resolve a long-running transatlantic trade dispute over aerospace subsidies. The two countries say Washington will suspend tariffs for 4 months on a range of goods. The nations were at odds over aid for Boeing and Airbus. A Dallas police officer is in custody, charged with 2 counts of capital murder. Authorities say a man told investigators that he kidnapped and killed 2 people at the officer's instruction in 2017. Officer Brian Reiser is a 13-year veteran of the force. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Charlie Pellet joining me once again. I'm Carol Masser. And Charlie, I feel like we are continuing to learn more and more about vaping and the impact that it can have on individuals. We've got a story out on the Bloomberg that talks about how vaping weed may be worse for lungs than smoking, and this is according to a study.
Indeed, and I saw the headline go by, and I was thinking, I wasn't surprised.
Yeah, I know.
I don't know why. I just saw that headline, and you put 2 and 2 together. Smoking's bad. Smoking cannabis. How can that possibly be healthy for your lungs?
It's like, wait, what? Yeah, of course. And so this story talks about a study that was done, findings from the University of Michigan, and vaping cannabis may put teens at a greater risk for developing symptoms of lung injury than those who smoke cigarettes or marijuana or who vape nicotine. So listen, it's all these things that come out, like these new ideas that maybe that people think is a better way of, I don't know, I think vaping was all about helping getting people off of cigarettes. But, as a result, I think there's some who wonder whether it all came out quickly. There was concerns about marketing to younger populations, but we're learning more and more about this and certainly the impact on our health, Charlie.
Indeed. Carol Boyd, lead researcher, professor at the university's University of Michigan School of Nursing, says the findings challenge conventional wisdom that smoking cigarettes or vaping nicotine is the most harmful for lungs. In a statement, Boyd said, quote, "Without a doubt, cigarettes and e-cigarettes are unhealthy and not good for lungs. However, vaping marijuana appears even worse."
Right, exactly. And listen, vaping devices have increasingly become a popular way to consume cannabis. That's including in the form of wax or oil. We've certainly covered it here about lung illnesses and deaths that have been linked to vaping, and that certainly put some concerns and ripples of concerns throughout the industry. But again, Charlie, it goes to, we're learning a little bit more about this. This is a study, and I'm sure there'll be more studies. And the longer something is around, we'll have an idea of the longer term impact on your health. All right, Charlie Pellet, thank you so much. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet, getting word that CoStar Group has withdrawn its bid to buy the real estate data firm CoreLogic. CoreLogic, known in the real estate industry for its home price indexes. We're keeping an eye on Broadcom shares. That is the chipmaker that supplies Apple and other big tech companies. It delivered a forecast that was in line with Wall Street estimates. Shares, they are down now after hours by about 8%. Stocks and bonds sold off today after Fed Chair Jay Powell underwhelmed markets by refraining from pushing back more forcefully against the recent spike in Treasury yields. S&P down 51, drop of 1.3%. S&P, by the way, briefly erasing its 2021 gains. The Dow down 345, down 1.1%. At the worst level of the day, the Dow had been down 2.3%, down 722 points. Nasdaq down 274, down 2.1%. Nasdaq is now negative on the year. 10-year yield 1.56% this Thursday. Gold down 0.8%, $16.98 the ounce. And West Texas Intermediate crude up 4.4%, $63.95 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. Want to get right back to our guest. We're talking about combating climate change by making just, a few simple changes in your life. Talking about it with us is Sheila Moravati, president and founder of Habits of Waste. It's a nonprofit focused on reducing environmental impact. She's still with us on the phone in LA, and you could find also some of the work she's doing at How Changers on Twitter. Sheila, let's talk about, I'm up on your website, and I was looking at it earlier today as well. There's a form you can fill out to join a challenge that you have. It's called #8meals. What's that about?
Yeah, so actually it's a brand new app that we have, and it's available in the App Store under Habits of Waste. And 8 Meals was basically born because, I'm very much involved in environmental work, yet one thing I've yet to, be able to commit to fully is going fully vegan. And eating every single meal plant-based is just something that I felt was impossible. If I feel this way, I can guarantee that many of your listeners probably feel the same way. And I felt very dissuaded by the whole thing, and always like I'm going to try this week, but then I'd fall off the bandwagon. I came across a study by the University of Michigan and Tulane talking about how Western cultures must decrease their animal protein intake by 40 to 50% at the very minimum in order for us to even have a chance at climate change. It is the number one thing individuals must do to make an impact. So I thought about that, and I said, okay, well, how do we translate that for the everyday person to be able to adopt this idea into their daily lives? So 3 meals a day times 7 days a week, 21 meals. What's 40% of that? That gives us 8 meals. So that's the goal, is that we all want to try and increase our plant-based meals by 8 meals a week. And we've created this new application to help everyone do that by providing recipes, linking the meals you want to plug into your calendar. You can check out how much of a carbon reduction you're making, because by eating 8 meals a week, it's actually 540 kilograms of carbon that you're reducing, which is the equivalent of driving a hybrid car a hybrid car for a year. So 8 meals a week for a year is equivalent to driving a Prius.
Don't you almost feel like I think about this year where we as individuals, global citizens, learned a lot about obviously a health pandemic, but also what it takes to create a vaccine. Like we peeled back the layers, and I almost feel like food production is a thing where I don't think we all really understand where a lot of stuff comes from or the impact it has. We've done a lot of stories here at Bloomberg about meat production and what it does for the climate and the environment. What do you think about in terms of what we need to do, though, to also educate people about food? I mean, we understand organic versus not and things like that, but the mass production of food, not so much. Although we got a glimpse of it, right, when all of a sudden the supply chain started coming undone during the pandemic.
Right. One fact that always sticks is when you keep it really simple. So, for example, creating 1 pound of beef is the equivalent of 8,000 gallons of water. So just thinking about these small things that, just like tidbits of information. And by the way, eating a plant-based meal 8 times a week is not so, impossible for many people. And in fact, you feel better, and it's 25% less expensive. So there's a lot of wins in there for your health, for your wallet, for the environment. So if we can just look at it like, okay, I'm not going to commit 100%, fine. Maybe you will. You never know. After 8 meals, a lot of people are like, I'm kind of grossed out by meat. I don't even need it. Great. But my whole mission is to educate with as much small bits of information that would interest the everyday person that's not in the environmental world, because people are living their lives. They're busy. They just got to get dinner on the table, and they've got work and school and a million other things, especially this past year. So, this is my philosophy that, if you can just give small bits of info, it's great.
What do you think is holding people back the most from doing things, little things, like you say, these habits? You change them. If everybody starts to change a little habit, that's a significant one. You can kind of alter the outcome of our climate. What's holding people back?
I think people just aren't aware that their impact matters. So it's just that everyone says, well, I'm just one person. I'm only one person. But if we all said that, then nothing would get done in the world. So this is an opportunity. Our whole website, our whole mission at habitsofwaste.org is really about inspiring people to know you do matter and your actions do add up. And then taking away obstacles. So, for example, the 8 Meals app is an opportunity for us to make it really easy and fun and interactive to try, increasing your plant-based meals or cut out cutlery. It's taking away a default setting that we were unable to communicate properly with the restaurants and the food delivery applications, but we were being bombarded with plastic that we didn't want. So we're here as an organization to help alleviate some of those obstacles in the way, but also to inspire the individual to know that every single day you wake up in the morning till the time you go to bed, you have decisions to make, and those decisions add up, by the billions of people that are on this planet.
What do you think is the necessary collaborations we need to be seeing, maybe more so, between private and public sectors on this matter?
Well, I believe that if we are able to basically give ourselves just a little bit of wiggle room, that it's not an all or nothing, that there's no shame involved, that it's really just about doing your very best. I believe that is the most important way to move forward on progress. And that is, and listening to each side. It really does make a difference, because ultimately companies want to do the right thing for their consumers. And if the consumers speak up and are heard, then it's a beautiful synergy. So again, back to the, cut out cutlery campaign that we did, the applications, they're like these emails, can you stop sending them to us? So they're listening. It's working. It's just a matter of, again, not shaming, and it's just positive, and just understanding that we all can make an impact.
All right. Well, good stuff. And please keep us posted on some of the work that you're doing as you continue to move forward. Really inspirational. Sheila Moravati, she is president and founder of Habits of Waste, on the phone from LA. You can find out more by going to habitsofwaste.org, and you can also find out more on Twitter at HowChangers. All right. Coming up in just a few minutes, we've got Sound On with Kevin Cirilli. What do you got cooking?
Did you know that Senator Cory Booker's a vegan?
No. Okay.
He's not on the show tonight. Bill Haggerty of Tennessee, the senator, and then Congressman Garamendi, who met with President Biden in the Oval today about infrastructure. But I could never do it. I'm from Philly. I like cheesesteaks, and my uncle's had a hoagie shop for 40 plus years, Carol.
Well, I have two things for you. First of all, I have a branch of my family, my sister and her husband and their 3 daughters, big-time vegans. The other thing, did you know that my younger brother went to high school with Cory Booker's older brother?
All right, now we got to get Cory Booker on the show. Okay?
We totally do.
But and I will eat a vegan cheesesteak, because I'm from Philly, but I won't. I'll get both. I'll get the real one and the vegan one, and then we'll eat it. Carol.
I like a lot of veggies. I like it, but I like a good steak every once in a while.
Aren't these teases fun?
They are fun. Hey, listen, you have a great show.
Thank you.
All right, Kevin Cirilli with Sound On. He's coming up next. For everyone on the Bloomberg Business Week team, have a good evening, a safe evening. I'm Carol Masser for Tim Stenovic, and this is Bloomberg Radio.